So the AMFI data just got released. We have Swarup Mohanty to talk more about that. Swarup, something which catches my attention is the continuous and concentrated flows into the small cap category. Overall flows have turned negative after 2 months. I'd like your reaction there as well. But the amount of money chasing small caps, is it becoming a bit of an issue?
First of all, thank you so much for having me on the show. See, finally, it is a clear differentiation between what you are. Are you a return chaser? Are you a risk mitigator? Initially, when we start our journey as investors, we are return chasers, and it takes some time to graduate to knowing that, the best portfolio for you is what is close to your risk profile. When you see flows like this, one-sided to small cap buying, you raise a caution as to the kind of risk people are now accumulating in their portfolios. If they are fine with it, absolutely no issues, because you have to understand two big things about small caps is that, of course, there is a liquidity factor to a lot of stocks there, and the ownership factor or the free float that is there in the market, and how much money can be absorbed when you look at the number of stocks that are available for you to buy. Now, once those things are taken into consideration and taken a decision, not an issue. If people are just looking at returns or possible returns, then I feel, some amount of risk that mounts in the portfolios gets ignored in the first stage.
So, some of your colleagues and peers from the industry have already started kind of aiming to contain this by stopping lump sum into the small caps. Do you think that's the right approach? Because at 19,500, funds are kind of chasing small caps at 16,800 or thereabout. They were actually negative. The entire flow situation and even the SIPs was shrinking. So that's we need to create more awareness among the investor fraternity around this issue.
So I completely agree with that. And it's always prudent to watch the holding of your underlying stocks, and there is that much you can hold from a risk mitigation perspective. And when a manager stands up and acknowledges that, always great from an industry perspective. If you reflect on our story, we closed our mid-cap emerging blue chip then in 2016 when our AUM was just 2,200 crores, because there is that much of the underlying you would want to own from a risk mitigation perspective. So when you see managers acknowledging that, it is just trying to safeguard the investor's interest, or they are putting the investor interest above everything else. And always great to see that happening in the industry. Shows the maturity which the industry is now going up to.
Mohanty, this is Vinny joining in the conversation as well. I also want to understand, obviously we don't have the SIP number for this month as of now, but do you think that, we will be continuing that momentum and we will touch maybe a fresh high even this time? Does it seem like a possibility?
Let's see, barring these last 40-45 days when we've had FI inflows, I've always maintained that the structure of this of the stock market has been changed by the retail individual and SIP investor of the country. I do suspect that should continue. We won't see much of a reversal. I'll wait for the numbers, but I won't be surprised if that number is added. Clearly, the go-to investment process of the retail investor of India is through the staggered SIP route. And they would have benefited in the last 2 years from just buying into the market. I mean, at this moment when India's story is so strong, I always ask people, do you look at 6.5 trillion as your outlook of the economy, or are you looking at 65,000 Sensex? If you look at both of them, they're completely two different approaches, but the 6.5 trillion is something which probably the SIP investor is on track for catching, is my submission.
Swarup, we'll let you go on that one. Thanks so much for joining us.
Thank you.
That was Swarup Mohanty, CEO of Mirae India.